Gentlemen, thank you so much for being with me today. Maybe I would like to kick off this discussion with the traditional question. How did you come to know about actuarial science? Maybe we can start with you, Dave.
Yeah, so I might have a slightly non-traditional way. My father worked in the insurance business, which I guess a lot of us have had relatives in the insurance business, but he figured out pretty early I was good in math. So he introduced me to his company's chief actuary when I was 13 years old. So I had the conversation with their chief actuary, and I was like, man, this sounds right up my alley. Business job, I can use my math skills. And so I always kind of had that in the back of my mind. And so when I went to school, I always thought I would do that, and spent my years dedicated to doing it, and I did it.
And why did you become or choose a health actuary, to be a health actuary?
Yeah, I don't know. I always joke, I don't know if I chose to become a health actuary. I think it kind of chose me. I'm probably like a lot of actuaries, right? I ended up in the practice area where I found a job. But I think in hindsight, it was perfect for me. I actually kind of picked a job for geography reasons. I wanted to find a job fairly close to my home, and it was a health job. But I think in hindsight, it's definitely the right fit for me.
Perfect. What about you, Nasser? How did you come to know about actuarial science?
Yeah, it's I would say it's 100% by chance. I was planning to study finance, and then I had a trip with my brother when we were in a flight, and he met someone and discussed with him my interest in finance, and I was planning to pursue finance degree. He basically told my brother about actuarial science, and basically my brother told him I'm good at math, and then I came to know actuarial science from him and from this guy he met in our flight. So it's
In a
100%
plane.
coincidence in a plane, 100%.
Interesting. And why did you choose to be health actuary?
And I basically joined Dave comment. I didn't choose to be a health actuary. Basically, I selected the company itself. I went with Buba for Buba itself, and for the team who's here, well-structured team, good foundation. So I thought it's a good opportunity to join such company.
Okay, Dave, Bupa is one of the best health insurance company in the kingdom. By the way, they have a good reputation in terms of their team and their product as well. So now let's move on to the health insurance business. Maybe I can start with you, Nasser. If you can provide us with what are the business product in the market in Saudi Arabia?
Sure.
Yes.
So generally speaking, health insurance is the largest business line within the insurance in the kingdom. Around 60% is a health insurance, while the remaining is split between motor and other. In general, the health domain is a corporate slash business oriented market, where around 97% is a group policies and only 3% individual policies. Again, the group policies split between large groups and small and medium groups, while the individual is mainly, I would say, there is a family product, there is a premium residency product, there is a domestic helper product, and there is the tourist visa product. So this is in terms of the basically different products within the market. So the large and of this corporate segment enjoy this kind of flexibility, where they have the luxury of choosing their product. So it's customized kind of package, while the individual, it's sort of a fixed kind of benefit. So they have to choose between number of different benefits, unlike basically the corporate segment.
Okay, thank you, Nasser. What about the US, Dave? I think it is similar, yeah? You have like standardized
There's
individual
some
product.
similarities. Yeah.
Yeah.
So, but the U.S. is, U.S. is weird because we're the only country that does it the way we do it. And it was really formed in a couple different segments. So the group is definitely how it started, right? So the group market was definitely how I'd say kind of after World War II, people were coming back. They wanted benefits. And I think a lot of employers are like, well, we'll offer benefits instead of salary and that kind of thing. And it kind of started that way. And then back in the 1960s, we had a major change where the federal government implemented two major programs. One, Medicare, which is primarily health insurance for our senior population, and then Medicaid, which is a primary health insurance program for lower income. And so roughly speaking, between group Medicare and Medicaid, that's 80 to 90% of our market. And then the remaining market is the individual market, which gets the most press in the U.S. That's we passed a law. President Obama passed a law in 2010, the Affordable Care Act, and that has shaped and changed a lot of our individual market. And that's where we get kind of most of our discussion points and things like that about our market.
Okay, perfect. Nasser, if you can provide us with highlight around the basic health policy that has been issued by the Council of Health Insurance in Saudi Arabia in terms of essential benefit schedule, drug coverage, a network of providers. Go ahead.
Sure. So basically, I would say the existing package is one of the richest package around the world. We benchmark this against different market units. Again, being part of a international company has a big leverage. So, we benchmark our existing package against different market units, the UK and Australia, Singapore, and different market units again. And we have one of the richest package. So we start with annual limit of 1 million real Saudi 1 million real cover. Dental, we have a dental cover. We have an optical cover. We do have recently introduced a preventative screening cover by CHI. We have both generic medications cover and branded medications covered by the minimum package. So a lot of cover within the minimum package. In addition to this, you asked me about the provider network itself. So the regulator imposed a certain number of providers in the minimum network. So these providers will ensure that the cover is complete and the cover is basically sufficient to the members. In case that the cover is not available in this network, they will grant an automatic upgrade for this specific treatment that is not available in that network. So the cover is sufficient in terms of the cover, and the benefit itself, or the benefits, the new benefits itself is very rich.
Okay, and the comprehensive health coverage is offered to individual, a group, or only group clients?
Sure. So basically, you have two. In general, you have mandatory cover, and you have basically the non-mandatory cover.
Okay.
By law, any private company in Saudi has to buy an insurance policy for its employees and their dependent. So the primary or the mandatory cover in the private sector is basically will have to comply with the minimum benefit of CHI, which I mentioned, the rich one. While the non-mandatory business is fully customized kind of benefits. So the individual himself or herself can customize, or basically can buy an insurance with less benefit than the minimum required by the regulator.
Okay, perfect. What about you, Dave? Do you have something like that in the U.S. market?
Yeah, it's fascinating. As I was listening to Nasser, just some of the similarities and dissimilarities that
Yeah.
kind of go together. It's interesting, like you talked about, required to purchase. That has been a very controversial issue in the U.S. We typically do not require people or employers to purchase things. There's been a lot of legal issues regarding mandates and things like that. But backing up a little bit to the like essential health benefits, that was one of the biggest changes that we had in the U.S. market with that legislation, the Affordable Care Act, or I'll call the ACA. Prior to the ACA in the U.S. individual market, we had very lean benefits. We also, insurance companies could charge more or less to specific individuals. And so that changed dramatically. So we have now, as part of that ACA, we have 10 essential health benefit kind of categories. And so every individual insurance policy has to have those levels of benefits. So that was and that's been a trade-off, right? That's a lot with health insurance, right? You offer more benefits. Well, what does that mean? It's more cost. So that's been, we've kind of settled in where people are used to those benefits now, but that was a fairly controversial thing in a while because people are, the legislation is called the Affordable Care Act. And people were like, well, if you add a lot of benefits, it's not going to be affordable.
Yeah.
But we definitely have a lot more benefits now. So our individuals have a lot more coverage. And then Nasser, you mentioned the kind of the network. That was one of the other things too, that has seen significant changes over the last 10 to 15 years. Again, insurance companies prior could do quite a bit of limitations in terms of where you could go and who you could see. And now, the term, that we use and most people use is network adequacy. And so there are requirements under the ACA that you have to demonstrate that you have adequate network coverage. And and it's a separate law, but one of the big things too, in terms of essential health benefits and things, is the mental health piece. Prior to the ACA and prior to some other laws, mental health coverage was not covered in the individual market much in the US. And now with network adequacy and parity laws, that is probably one of the best areas and biggest areas where we've seen a change in our benefits.
Perfect. Nasser, Dave mentioned something really important, which is affordability of the coverage. How is the premium rate in the market here in Saudi Arabia? Because I remember motor insurance in 2023 witnessed a significant increase in terms of the premium. What about the medical?
Honestly, a very good point mentioned by Dave regarding it's basically more benefit, more cost, and the product becomes unaffordable to your clients. They was about to mention this point under the client education. So, generally speaking, we noticed a lot of changes that led to a higher increases and a product that becomes unaffordable to majority of, or at least to the vast majority of the groups. So one of the main increases is basically the new updates of this table of benefits, where each time regulator introduces a more benefit to the basic table of benefit, and again this benefit will lead to additional increases in the cost. So this is one of the challenges. Again, we had 2014 a major change in the table of benefit, and again another change in 2018, and one more change in 2022. So these three changes led to an increase in the premium. This is one.
What
one
about
major,
yeah. Do you have other measures, or
so
that's
the second major thing? I would say that there are two major basically things. The second major thing is the Article 11, and this is Article 11 is basically an article that I would give an example before even explaining the article. Previously, an individual can go and access public hospital and get the treatment without basically paying anything, and even his or her insurance will not be paying anything for this treatment, because the individual went to a public hospital. In 2021, the government started to activate this article, and basically the activation that mandating insurance company to pay for these kind of services. So we faced a lot of pressure because we haven't basically priced for all these policies since even the launch of the article itself. Because the article since 2006, however, the activation itself was 2021. So this is a major pressure because a lot of these treatments basically were or are high risk treatment, and again by the nature of the hospital, of the government hospital, they are very skilled and high risk kind of treatment. So people tend for my major cases tend to go to public hospitals, and we were not paying for these treatments. So once the government activate this article, we basically had to pay a lot of basically money just to cover these services. And along with time, these government hospitals start to even cover more simpler cases, not only the high risk. So we continue to cover both the private hospital and the public hospital, which again add more pressure to the cost. The third one, again, after COVID, the deferral claims and the change in the behavior of the members itself. So we saw a major shift between the members. Now the members tend to utilize high-end providers. Previously, someone with a high-end cover will go to a clinic because it's only close to his or her home. Now it's totally different. People tend to a high-end provider because they just want to be precautious. They want to make sure that the treatment is sufficient, and the facility is the facility will I would say most likely will treat will treat him or her. So these are, I would say, the three major changes that put pressure on the cost.
What about the competition in the market? I know we have like two companies in the market are controlling 70% of the health insurance business. Do you think this has an impact on the prices?
I would say the impact is positive rather than negative.
How?
Because again, it's not kind of monopoly, because we're basically competing against each other. Each one is trying to provide better services and affordable prices, and I think this is a kind of a healthy competition between the two major players. You know, again, we're seeing at least in the last 2 years, many players in the market start to basically have I would say, a noticeable market share.
Perfect. Dave, health insurance market in the US include or involve many regulations. Some of them focus on the commission, premium rebate, premium stabilization program. If you can give us a brief idea about those regulations, how important they are for the health insurance, or how they impact the health insurance market.
Yeah, so a lot of it kind of centers around the affordability, right? And then kind of the other side. So affordability side for the consumer, and then kind of the stability side for the insurer side. And I do want to touch on the competition issue here in a minute, and before I forget, I will. But in terms of so what we have done in the U.S. with affordability is when the ACA was passed, we did have premium subsidies for lower income people. All right. So the federal government lowered premiums, and that was based on, certain thresholds of income. And that did, that was, I don't remember the exact number, but let's call it 75% of the individual market was a subsidized member. that had lower income and received subsidies. And then what has happened, and then there was a second subsidy program called the cost sharing reduction subsidy. And that was, and so that was established again to help lower income folks. And that was like, in addition to premium subsidies, the federal government helped pay for your copays, your deductibles, things like that. Well, then when we kind of shifted into, we had some political issues around what we call CSR, the cost sharing reduction. How that is funded is still a very political hot potato in our market. And, with our elections coming up here in November, I have a feeling that how that CSR is funded may change depending on how things go. But so those two subsidy programs were kind of the initial thing. And then when Nasser mentioned, the pandemic and COVID, that changed some of our legislation. So there were there was some additional legislation that increased the amount of subsidies for individuals. And not only for those lower income, I would say it provided premium subsidies for more middle income people. Those subsidies are currently expected to expire at the end of 2025. Again, that is a very political issue in our markets, is if that's going to continue or not. So from the consumer side, that's, where, the government, I would say, is chipped in from the affordability side. From the stability side, I alluded to, carriers before the ACA could rate people up or down depending on how healthy or sick they were. In the new market, they cannot. Well, so that did create some instability for insurers. What if they got every sick person in a market, that kind of thing? And so what we have seen with these new markets, there have been multiple approaches. I do want to highlight, in the US, our market is not quite this many, but think of it as almost 50 different markets because we are state-based primarily, while the ACA is a federal piece of legislation. Most of our markets are run by the states. And so some states have implemented different versions of some of these measures that you're kind of talking about, these stabilization programs. We have a fairly traditional reinsurance program. We had one at the start of the ACA where the federal government chipped in like a traditional reinsurer. Now that is a state-based, so states can decide if they want their own reinsurance programs. I think at last count, there were about 15 of our 50 states have implemented their own reinsurance programs to help stabilize the market. Another program we see quite a bit is called the risk corridor. And that was a temporary program for the ACA, but we see it in some of our other markets as well, like Medicaid, where basically risk corridor program is where if a company, there wants to be some incentive for carriers to go into the market, right? And what if they're wrong? They want to stabilize or protect those carriers. And so it's just basically based on the loss ratio. So if your loss ratio is a little worse than what you expected, the federal government will help chip in a little bit to help you. If it's way worse than you expected, they'll chip in a little more. Flip side is if you do a little better than you expected, you got to give some money back, that kind of thing. But it helps stabilize, bring everyone into the middle. So those are the main stabilizing programs. I do want to jump onto the healthy competition because I think that is the keywords Nasser brought up. So it's interesting. I've done some studies on the competition, and that's been a very big thing in the US and it's led to some lawsuits. Some of our states only had one competitor. Okay. Some of our states had 8 competitors, right? And it is not 100% correlated that, the more competition, lower rates. Some of the states that didn't have a whole lot of competition, they had relatively low rates. Some of the states that had higher competition actually had some of the higher rates. I do think it does help when it's that healthy competition. But what we've seen in the US a few times is what happens with the competition is we get new insurers jumping into the market. They want to get a lot of membership and they're just artificially low or they're too low on their premiums. And then that disrupts the market. So yes, it brings competition to the market, but they're too low and it just disrupts everybody.
Okay, interesting. Now let's move on to the product design. When insurance product is designed, key teams are involved in the process, such as actuaries, underwriters, finance. If I ask you, Nasser, what is the current role of an actuary versus underwriter in the Saudi insurance market?
Sure. So basically, I would say there are uh, two parts of this question. The first one is launching a new product. The launch itself will trigger from the marketing and sales. So
Yeah.
the sales and marketing will launch or will suggest a product where we start to have an ideation phase. We call it ideation phase, where they gather underwriters, actuaries, IT, and different stakeholders to basically assess the feasibility of the product itself. I'm saying feasibility from different angles. First one is the market need. Second one is from technological point of view. Uh, um, the third one is basically from a risk and a pricing point of view. So all these group of people will help the company decide whether to launch a product or not. Uh, this is generally what happened while we're launching any new product in the market. While in the day-to-day operation, the difference between actuary and underwriter, generally speaking, an actuary, at least in the market, and this is what I noticed, will recommend the overall loadings for the entire portfolio. And loadings includes the inflation rate, expense loading, any emerging trends in the claims that underwriter should take care of. For example, I mentioned Article 11. I mentioned COVID, deferral claims after COVID, and all these stuff. So they actually would recommend these loading structures along with development factor, credibility factors, and will monitor the performance of the overall portfolio. While the underwriter will look uh, will look into case by case to judge the performance. So they will look to the performance of the group. They will look into the benefit structure of the group itself, and then the commercial appetite of the company, whether to allow for more discount or to load more. So I would say the underwriter, if I imagine if I imagine a spectrum, the underwriter will be more into the commercial angle of the
Okay.
pricing, while actually will be more into the technical side of the pricing. Uh, and this is at least my view between the two different roles within the current market.
Any common date in this regard, especially are coming from well-developed markets?
Yeah, I would say that kind of it takes a village approach is similar in the US as Nasser described, right? It's all the different groups, the marketing and sales and all that. The way I always kind of describe it, kind of on the difference between the actuarial and the underwriting side in the US is the actuaries tend to focus on the forest while the underwriters focus on the trees, right?
Yeah.
So the actuaries kind of help set the big old profile and overall, but then once the insurance company goes to sell a group product, that underwriter has to go in and really assess that specific employer, right? That underlying population. So I think a lot of the things are very similar. But actuaries do tend to be a little bit more broad and big picture. Those underwriters really focus to make sure that those risks are addressed for each group.
Okay, perfect. We know that we have different rating structure, for instance, community rating, predictive modeling, etc. What is the current rating structure used by insurance companies in the market under each group, individual, small group, large group? Go ahead, Nasser.
So generally speaking, large group and corporate and medium enterprises mainly is the experienced rated groups or pricing, while individual and small groups are community rated. Community rated, it's using different kind of predictive modeling. Uh, However, the dominant is GLMs with different rating factors, ranging from, I would say, some companies use as simple as 3 different factors, while others using more than 10 different rating risk factors. So it really depends on the maturity of the company itself. Uh, so this is generally speaking the current pricing mechanism in the market.
Any comment, Dave, in this regard, or I can move to the.
Yeah, I think in the US, we tend, very similar to what Nasser said, at the largest groups, a lot of that is kind of like predictive modeling, that kind of thing. But as you get smaller size groups and you get to the individual market, historically, we have been gender and age based, typically in age bands. So maybe every 5 years. So if you're 21 to 26, you have one rate, and then it bumps up every 5 years. So historically, that has been our general approach. Now, again, with the Affordable Care Act, we cannot rate on gender anymore. So it's not specific by gender anymore. And the age bands have also changed in the individual market. So it's basically by single age now. So you're not lumped in every 5 years. But that is, just with the ACA market. But as I said, we have 50 states, almost 50 different markets. Some states do community rating. Some of our states, like New York, have used community rating for a long time before the ACA, and they're still doing it. There's some challenges there because of anti-selection, right? It sounds phenomenal to charge everybody the same rate. But of course, when you have a mix of older and younger people, what tends to happen, the younger people will tend not to purchase that rate. So, it's one of those trade-offs. But in our US market, we see a lot of different versions of kind of how we rate things.
Perfect. Now let's move to the data side. We know that data is the lifeblood of healthcare business. It gives insight to organizations, current status, and help actuaries to make informed decision and projection as well. Nasser, maybe I can ask you this question. What are the key data problems in the healthcare market here in Saudi Arabia?
So thank you, Ashwag, for this question. Data again, it's the most important asset any organization has. So I think the health data is one of the misses data in the world, where basically you have unstructured data, you have a lot of pretext data describing the description of the treatment itself, describing the notes of the doctor. So a lot of issues in the data that is mainly driven by the kind of data and interaction between the hospital and the provider itself and the insurance company. So this is one of the main, I would say, this is the only and main issue basically in the medical data.
Okay, and how companies or insurance companies have been addressing those issues, and the regulator as well?
Sure. So basically, starting from 2000, I think 21 or 2020, I can't recall, the regulator introduces a new data hub where providers and insurance company exchange data through. It's called Nafis. And the vision is that Nafis will basically solve this issue. And again, the implementation of Nafis on different phases. We're not in we did not implement the system fully yet. So we're still expecting more and more, I would say, versions and development into the system that will solve this issue. However, currently, some companies are using a machine learning techniques just to figure out and solve the pretext issue. A lot of large natural language processing techniques that just to get the benefit of this data. A lot of use of AI to help them structure this data and basically use it in their decision making process. So this is the quick fix that currently deployed by the companies.
Okay, interesting. What about you, Dave? What's going on with the data in US?
Yeah, I think this is obviously an issue. It doesn't matter where you live in the world, right? It's data, as the Hester said, is by far the most important thing, right? With the health insurance, just analyzing the data and having good data to work with. And we have a lot of the same issues. I'm always amazed. A lot of the regulatory work I do is, I've jumped into looking at a lot of the data sets by some of the largest insurers in the US, and it's amazing that they all have data issues, and that's something we have trying to work towards electronic medical records. I think Nasser touched on a very important issue, is just kind of that transcribing from the provider to the carrier causes a lot of issues. So try to standardizing that has been something we've been working for in the US. And then also similarly, again, it's a little bit of a challenge because we kind of have to do it by state, but several states are implementing kind of a standardized repository as well, and we call that the All Payer Claims Database, or the APCD. So that is a area where the insurers have to, send in kind of standardized data in a way where people can, it's consistent. People in a state can review it. The regulators can use it. Consumers can see and compare data from different insurers. So it's a lot of the same elements Nasser's talking about.
Okay. In the last few years, we have seen different risks hit the insurance market. For instance, mispricing, medical trend, a change in the regulation, pandemic. Maybe I can start with you, Dave, if you can give us a few words in regard of those risks, and if there are other risks that we have seen or a U.S. market have faced.
Yeah, I think in the US, so one of the differences we really haven't talked about, or I don't think I've highlighted yet, is the US, we spend more money than anybody in the world, and we're not getting the outcomes that you would think we would get from spending as much money as we do. So that's one of the challenges we have in the US, is a lot of people are trying to figure that out. We spend way more on our GDP on health than other countries. Yeah. And I think and this is somewhat of a stereotype, but this is one of those kind of risks that is maybe a little different in the US, is we have, and Nasser touched a little bit on this in terms of going to a higher level of provider. That's our whole US market. That's how everybody is. They always want to get an MRI instead of an X-ray, right? We want the best all the time. Well, of course, when you get the best, it's more expensive. So we have a tendency, we want the best, and we want it now, and we want it today, tomorrow, the next day, over and over and over. And so one of the biggest risks we have in the US is I would call that, acuity or severity. Are the right services being implemented? Could there be other things? And so we've kind of tried to structure some things differently, but our trend in our market does tend to be very high based on the practice patterns. So one of the things we have attempted to do, and I think you guys are probably doing some stuff as well, is historically in the US, we've had a fee for service reimbursement with providers. Whatever the provider says, we're going to pay them. And there may be some discounts and there's some negotiations, but to help address a lot of these risks and higher trend is we are seeing a lot more new versions of contracts with providers. And so that might be helping a little, but I think we got a long way to go.
Perfect. Nasser, any comment in this regard about the Saudi market?
I think one of the challenges basically is inflation rate. Inflation rate is two parts. The first part is driven by the behavior and changes and the demographics of the company itself. So it's a utilization kind of inflation, and the other one is the prices, price pressure from the healthcare providers, and the second one I cannot honestly tackle. I cannot change the demographics of the population. However, the first one is a risk because we are seeing more and more consolidation in the market. Large players are becoming larger and larger, and this will put them an advantage in terms of negotiation. However, a disadvantage in terms of affordability to the end user. So I would say this is, in general, the main one of the main challenges.
Perfect. What about the key driver of the medical trend here in the kingdom, Nasser?
So again, as part of our earnings call, we publish each quarter a report where we're basically splitting the overall medical inflation into different buckets. We have the what we call it baseline medical inflation. This is the overall medical inflation that is because of aging, utilization, provider increase, and the general provider increase in their fee and all this stuff. And we have additional bucket due to Article 11 and all these regulatory changes. We have another bucket regarding tuna fees and the fees from the regulator. At least for 2024, as of Q1, the main driver of inflation, I would say in this year, is Article 11, because a lot of public providers started heavily to bill us, and they're currently ready or their system were ready, and they started fully to bill us. So this is one of the major inflation driver this year.
Okay. Any comment in this regard, Dave?
Yeah, I want to circle back to a comment Nasser made that's that has been very important in the U.S. You know, we talked about healthy competition from the insurer side, but Nasser mentioned the consolidation on the provider side, or decreasing competition on the provider side, and that has been a big issue in a lot of our states. A lot of our states don't really have an urban area. There's not a whole lot of providers, and so when there's consolidation, what does that mean? Well, the insurers don't have a whole lot of arguing power with one provider, right? The provider's like, well, you got to take what we offer you, kind of a thing. And so the consolidation on the provider side has been a very important issue for kind of that unit cost trend, because the providers, with that lack of competition, they can ask for more, and it's really tough for insurers.
Perfect. Now I would like each of you to provide me with 1 to 2 sentences in regard of the following. I will start with you, Dave. The importance of using predictive analytics in the health insurance.
Yeah, that's a nice, big, open-ended question. Way I would say it is, as actuaries, we have historically used very traditional means, right? We have all been kind of trained and educated on, you do it this way, you do it this way, you adjust for this, you adjust for that. I think what's so important about like predictive analytics is just a little different mindset, right? Just a little bit of, let's try something new. Maybe there's something else impacting. Maybe there's some lurking variables underneath that we haven't really thought about. And so I think that's what's so exciting about predictive analytics, and the importance of it is, I think it'll give us as health actuaries just a little different view and something different to think about.
Perfect. Nasser, the importance of a client education.
Yeah, I think basically the client education is a key, because it links with affordability. And once the client understand that adding benefits will lead to higher cost and will lead to an abuse from here and there, will basically help big time in negotiation will help big time in designing the best affordable product for the client.
Perfect, Dave. Innovation in terms of technology, plan design, medical management. Go ahead.
Yeah, I think that kind of centers back to what I was alluding to earlier is really everyone, when there's a new technology, everyone wants it because it's the best. But
Yeah.
we do need to assess, is it the right treatment for 90% of the cases, 85% of the cases? We need to make sure that, that the services provided are appropriate. A big thing, I don't know if it's impacting your market much, it's impacting our market a lot, or the new drugs that are for pre-diabetics, which also are for weight loss. And so that's a big challenge for us, is when is it appropriate to use these drugs? When is it not? They are great drugs, but they are expensive. And so if they're not necessarily used for exactly what they were built for, are we adding cost to the system? So new technology, new achievements are great, but we have to make sure we don't do it in a way where it just keeps piling on expenses into the market.
Perfect. Nasser, impact of the healthcare transformation and the commercial health insurance.
Sure. So whenever transformation happen, it will basically help the overall quality of the service or product. It will definitely lead to better outcome in general. So I would assume after transformation or during transformation should have would say negative impact on the cost. However, with time, this transformation will lead to a better outcome. Then will benefit the utilizer or the beneficiary at the end because of the quality and the service.
Perfect. Gentlemen, thank you so much for your insight today. I appreciate being with me today. Thank you so much.
Yeah, thanks for having me.
Thank you.
Thank you.